Yes, sir. Mr. Chairman, Vice Chairman, board members, and Mr. Superintendent Thurman. You have in your package the monthly financial report ending June 30, 2014, which of course is our end of year. The document you have in front of you indicates a note on the front that this is a draft. It's a good bit more than a draft, but we're going through that process of putting in the payables and making the appropriate adjustments, so we are moving towards the final position of the FY14 budget. But I will speak from what's in front of us, which is substantially complete. As you will see on the first page, based on a budget of $764,271,000, the amended budget as of this past mid-year, we've collected, as of June 30, $781,077,353. So we've collected $781 million against our budget of $764. You go to the bottom of that same page, you'll see we have expended, and there are some adjustments to come in. We've expended $752,663,000 against our $764 million budget, and as compared to our $781 million in collections. So right on the face of it, we have some upside relative to fund balance, okay? In the T-sheets for the FY15 budget document, we projected a $20 million fund balance, okay? We are hoping to exceed that as we go through this accrual process and closing the books on FY14. In another 10 days, we should know substantially more about where we are. We have, you have heard me say since I got here that the idea is to collect more than you project and to spend less than you project. This first page shows that we've collected 102.19% of our estimated revenue, and we've expended 98.48% of our estimated expenditures, okay? That's the trend in the right direction. I would hope that the 98 would be down at 93, 94, 95 in the next year or two, okay? So this is the way you do it. This is how you recreate your fund balance as you go through time. Collect more than you say you're going to collect and spend less than you say you're going to spend. The month of June continue with the proportionality you've seen recently. In the last month of the fiscal year, we collected $48,715,000. We actually spent $71,033,000. Okay, not unusual, and this sort of is why we still qualified for tax anticipation notes, which we closed on July 15th, in the amount of $36 million. If these trends continue, we'll have trouble qualifying for the loan going forward, but we'll see what happens this upcoming year. The second page is the pie chart, which you've seen before. The third page, the trend lines, is sort of the good news. It shows you where the up collection, the 781 compared to our estimated 764, really came in at, and the lion's share of it, of course, is in our local revenue sources. We had estimated $384,896,000 in terms of local revenue sources, most of which is property taxes, but there are multiple other substantial revenue sources. And we actually collected against that 384, $401,983,000. And as you know, this is the time of year where the tax commissioner continues to wire. We continue to get information on prior year revenue coming in, and we book that back into 14. So there is some improvement as we go through time, even on the revenue numbers that you're looking at today. The surplus, or operating surplus, if you go into the document on page 13, okay, what we call a fund balance at June 30, 2014 rolls out at $32,060,000. That's sort of our operating surplus as we close the books, and like I say, there's some additional expenses and some incoming revenue as we go through July and August. The last page, the variance report, the last page of the package, page number 34, indicates what I've been talking about, that we had collected 102.2 and we had expended about 98% of our budget as approved at mid-year. That is the summary of the June FY14 report. We will be updating this document because, as we've noted, that this says draft because we're in the process of closing the book. I would request that the board would accept the monthly report.
Is there any discussion? Mr. Coleman? Mr. Coleman, followed by Mr. McMahon.
Great.
And then Mr. Mayfield.
First of all, exactly right. This is trending just the direction you would want it to, and it's great to see folks coming in under budget and the revenues coming in ahead of schedule. All of those are wonderful things. Just a couple of quick questions about line items to make sure we're following up on those. One was, I noticed in benefits we ran slightly over our amended budget, so we came in even ahead of schedule by about 1%. My real question is, in 2015, in the 2015 budget, do we think we've accurately reflected the benefits that we'll incur next year based on our understanding of how we ran slightly over this year?
Yes, sir, Mr. Coleman. You're correct. The benefits is slightly overridden in terms of expenditures by what we budgeted. As you know, a substantial part of our benefit posture comes through the state, but we did make the appropriate adjustment, seeing that trend as we went into the 15 budget. So we have a level of confidence that everything will come in within budget for FY15, given if there aren't any changes at the state level.
And then second question, really only the only other, as I can tell, large area of spend where we're over budget in any way is on school administration, where we're about 2% over budget. Can you talk about what kind of caused us to run slightly ahead of schedule there, and again, whether that's reflected in our understanding of 2015?
Yeah, my staff is looking at that question,
Okay.
and I think it's probably some type of a salary issue, but we're looking at the essence of what has caused that.
Okay, great.
Mr. McMahon.
Thank you, Chairman. Thank you, Dr. Bell. Big picture, you said the draft will go hopefully final in a couple of weeks?
In a couple of weeks, we'll have a 95+% confidence level relative to the final position of the general operating budget. When an update of this document will be made available, I'm a little uncertain right now, but I don't think you're not going to have an updated document within a couple of weeks. So.
Well, and I understand that the state, we don't have to file our DT, is it 46? DT 46?
DE 46, yes.
Right, until October.
That's correct, but we don't base our internal reporting on that report.
Right.
But we use our internal reporting to build that report.
And I appreciate your speed of execution. This is as fast as I've ever seen it from a turnaround standpoint. So I appreciate that, and your staff working so hard. For the public's benefit, I'm going to take you directly to page 5 under year-to-date on top of the page instruction, and just on the salary accrual to where we've got paid instructional salaries under fiscal 14 at $280,791,387, and then under the accrual we've got $52 million that we are making an accounting of that. Can you explain, for the public's sake, what that, I mean, the collectively is 355. Can you just explain in layman's terms, please, where the salary accrual fits into that? Are those actual payments that have been made, or we're going to make, or?
Keep in mind, this report is as of June 30th, okay? And vast majority, if not all of our teachers, work 10 months but get paid on a 12-month basis. And so what's going on right now, you're correct. The difference between that actual expenditure and coming up to the budgeted amount, instructional salaries of 336 are those accruals that are taking place during July and August. So when those accruals are fully laid in, we'll be closer, but on a straight line basis, as you have observed previously, it does appear that in instructional, not just C&I, but overall instructional, we're probably going to underexpend in terms of salaries. That, of course, is sort of lending itself to the good news on the fund balance, but we're doing research right now to find out exactly what that means. Where did we not spend money on salaries?
Right.
Instructional.
So to take that a step further then, from an instructional standpoint, our teachers' contracts, are they dated July 1st? That's an HR question, I guess?
Yes, they are effective July 1 through June 30th.
So we're paying teachers right now. Are we accruing salaries on the finance side for fiscal 15?
Yes, we are. Teachers' salaries that they're currently receiving will go through August 30th, 2014. The actual paycheck for a teacher who starts today will not come until September 15th. So there is accrual.
That brings much clarity to the process, and I appreciate that, and that's finance and HR working together to make it a very clear, transparent process for everybody here in DeKalb.
Mr. Mayfield.
Yeah, that's
Sorry,
it for me,
Mr.
Chairman. Thank you so much, both of you.
Dr. Bell, a couple of questions on the revenue. I guess the one that sort of sticks out would be on the beverages. Do we still have confidence that we are getting all of these numbers, given Sunday sales? I'm always curious about that number being lower.
What page are you on, Ms.
I'm
Mayor?
sorry, page 6. No, I'm sorry. Actually, we can actually go to the summary page, I believe. I think. Hold on. No, on page 4. Yeah, this number has been consistently lower than in terms of its year-to-date percentages. And given Sunday sales, I guess I would expect those numbers to be higher. And that's just a supposition. So I just wanted to find out if we were able to confirm whether or not the formula for delivering those dollars to us have been updated to reflect Sunday sales, I guess.
The percentage that the school board takes of alcohol beverage sales in the county, it's not been adjusted for Sunday sales.
Okay.
And when the Sunday sales debate was taking place, I remember I was with the county, and it went on for a number of years. There was some concept of displacement. The layman's term would be stocking up. Okay. And so if you stock up and you don't buy, okay. So we're going to certainly take a look at it. But on an estimate of $5 million, we had collected as of the end of June $4,364,000.
Right. Yeah. Right. My second question has to do with the performance of transportation. What's happening there? I mean, at almost 300% of what was expected.
Very good question, Mr. Mayfield. The original transportation numbers are what were put in by the Transportation Division, okay? And as we went through time, they had generated more, say, revenue from field trips and that type of thing, okay? And they asked, based on certain needs, to have additional money budgeted for them. I think we did something like that at mid-year. So that's what you're seeing.
So just an uptick in field trips is essentially what's generating the revenue?
I think they've performed a lot more in terms of field trips than they originally anticipated, yes.
Okay. And I'm just saying, that's what we know as...
That's yes, sir.
Okay, all right. And I guess the only other question has to do with the varying performance of both transportation and other for year over year. There seems to be these large swings. And I guess my fundamental question has to do with whether or not we have a good handle on projecting revenues in these departments.
When you take a look at that other item, you'll see originally there was a projection of $11,033,000, but we did something this past year we haven't done before, which is the mid-year adjustments, which is about $8 million, as you will recall.
Right.
Okay. And if you go up above, you'll see the property taxes. The 362.9 up to the 370 million.
Right.
We think that is just transfers within that box of numbers. Okay, that's why the 11 million came down to $1,152,000. But property taxes estimated went from original 362.9 to 370?
No, right. I mean, I get the property taxes. That's the top line, right?
Yes.
Right, and I'm really looking at the two lines, the transportation line and the one below that. When I compare its performance year over year, you know, we're having these large swings, which I'm guessing wouldn't be property value related, and that somehow we're generating revenues in these areas that we don't have a handle on projection. Is what it appears to be.
Well, I see your point. You're saying that in that other block, when the adjusted budget was reduced to $1,152,000,
Right.
okay, right now against that we spent $1,670,000.
Right, and again, with the transportation, we almost tripled it, and it just seems like an inordinate amount of field trips, I guess, to triple the performance.
Yeah, that's a good point. We have discussed with transportation the additional field trips that they've been asked to execute. We'll have to take a look at it further.
Okay, thank you.
Mr. Campbell?
Dr. Bill, I echo what my colleagues have said. Great job on managing the budget for this year. You talked about revenues. I say in particular the revenues are always great to get additional revenues, but I think you've done a fine job of managing expenses. And when we try to increase our fund balance, I would say great job with having a $29 million surplus that we could possibly move into fund balance.
At this point in time, yes, sir.
Just a couple of questions for you. On page 1, the summary page, I noticed that you said it's a draft, but just for your own purposes, if you look at fiscal year month to date and year to date, the receipt side, it doesn't foot down, so you can have your team to assess the footing. The 10 and the 32 month to date revenues, June 2013 doesn't foot properly, and it's also the same thing in year to date. So just for cosmetic purposes, you might want to get your guys to get it where it foots properly. And you see
Okay,
what I'm saying?
we'll take a look at that.
See
yes,
the
sir.
numbers I'm speaking of?
Yeah.
Okay. And then I have a question, just a couple of questions on page 4, the extraordinary item insurance recovery, $1 million. I may not remember something that was said, but what exactly is that, the $1 million insurance recovery?
That's the insurance payment received on the claim of the partial burning of Hooper Elementary.
Okay.
Yeah, came in, we booked it as a separate item, as an extraordinary item.
Okay, thank you. And then my last question, when you look at page 14, you're talking about year-end accruals, and this is a question to you, just trying to understand the financials. Page 14, where you do the reserves for encumbrance, reserve for debt service, what have you, are those year-end accruals that you're speaking of?
I'm sorry, I'm on 14, I see, okay.
Look at total fund balances, you have reserve for encumbrance, reserve for capital outlays. Are those accrual accounts? What is that?
It is correct at this point in time that we have projected possible payables of about $7 million. Payables will come through, certainly items that are already encumbered will come through and be booked back into this year, even though they may come in July, okay, or August. Okay, I think the period we use here is 60 days, so yes. When I say, when you just take the absolute mathematical difference between the revenue and the expenditures, we do have, before we finally state the fund balance, an estimate of payables that are going to come through the system. That number's in the 4s right now, and our estimate's in the 7s. So if it stays there, then we'll pick up 2. But there are some other liabilities that we have in terms of closing the books that could jump into that 7.
Mr. McMahon?
Thank you, Chairman. And excellent questions, everybody. Just stay on that same page 14 with the encumbrances and prior year adjustment. $236,613 under K-12, general K-12. You see what I'm talking about? Yes, sir. Is that after the year end where you make the adjustments? So is this number representative, or just explain that number to me, please? Yeah. Not where it came from, but.
Yeah, this is a number that I think have been on the reports way back to the beginning of this year, okay? Yeah. There are things that come through the system where we make expenditure adjustments, expense adjustments, hitting the budget as you go forward, and that little number has been there a number of months now. I couldn't tell you exactly what it is, but
And I was going to segue into August and September for us. Well, this will be the number that now that we're done with our fiscal year, right?
yes.
If we're still paying, if we'll get our financials and we'll book some to the last year to fiscal 14, that will be the number?
Yes,
For
that number will move, okay. It would move in the July report. This number won't move when you see the final non-draft report.
This is for fiscal 13.
It's items that came into this year from fiscal 13, yes. sir.
Correct.
Yes.
So this is the final number for 14, representative of 13. So going forward, we will see the 15 numbers hitting for 14.
Yes, we should. The system has not been reworked to change anything.
No.
It would be highly coincidental if this number comes in the same.
No, I'm not questioning that at all. I was just wanting it for clarification. The other clarification I would like to have is back to Mr. Mayfield's question. Where would, on the revenue side, and it's like page 4, where would remember we were talking about this is the first year that we've had birthday tax for new car purchases?
Yes.
Where would that fall under for revenue receipts?
It will be under local sources, and it will be under taxes, property, okay? I don't think it's going to be under other. And if you've looked in detail at the transition between the prior year birthday tax and the part of it now that is still a sales tax and the part of it now that is still ad valorem and the state's guarantee based on your 12-year, it is horrendously complicated. But I would say it's in the local sources property tax number.
Thank you. Thank you, Chair. I'm done.
Thank you. No further questions or comments. Is there any opposition to placing this item on the consent agenda? Hearing none, this item will be placed on the consent agenda.